What is going on, investors? Hopefully you guys had a wonderful day out there. It is time to kick off earnings season here on the Investor Channel, and we're going to do it with JP Morgan Chase, ticker symbol JPM. On today's video, we'll take a look at the Q3 revenues. Those came in. We'll see what the company has been doing. Take a look at a little bit of the news over the last month or so with JP Morgan. Catch you up with that just in case you've missed some of those press releases. Then we'll jump into the numbers. We'll take a look at these. Where are loans standing? Where are customer deposits standing? Where are these provision for credit losses? We'll talk about that, not only how it applies to JP Morgan, but at how it applies to the broader economy, macro environment, inflation. You get a lot of data when we look at banks, okay? We're not necessarily looking at the banks just out of the lens like I want to buy or sell JPM shares. No, this gives you a lot of views into the economy, into business, especially when you're looking at one of the largest banks like JP Morgan. Now, we'll also take a look at the stock from a technical perspective. As you can see here, we have gone sideways with a JP Morgan and Chase stock. But look, over the last year, stock's up 61% year to date. Boom, up 30%. You got to expect a stock like this to take a breather at some point, although if interest rates continue to rise, that is absolutely bullish for JP Morgan. We'll talk about that. Right now, you're getting a $4 per share dividend. We'll talk about the dividend here in a second. That was up over last year. Right now, you get about 2.4% yield. If you can get this one to drop lower, maybe you can get this one closer to 3% yield. That might be relatively decent, although in a rising rate environment, maybe not as good as it was in the past. Now, JP Morgan's Q3 earnings came in, and they're helped by this reserve release. We'll talk about that as well. They also see some strengthening in the economy as well, although when we dive into the numbers, I'm not exactly sure we're seeing that. I'll talk about that here in a second. Now, the Q3 net interest income, that's the all-important income that JP Morgan makes, although they make money on fees and other types of things, came in at $13.2 billion. The consensus was right around $13.1 billion, so we're seeing that that's basically flat year over year. When we go through these numbers, you'll see a lot of flat to down, which could be why the stock is trading off today. The stock's trading off by 2.4%. We're recording this during regular trade, so who knows how this thing might end up. We also see a reduction in charge-off rates. At least this is upcoming. They see a 2% charge-off rate. People were expecting 2.5 previously. So they're seeing consumers actually relatively healthy. And obviously, if you look at the job market and that type of thing, it probably does reflect that to a certain degree. Now, JP Morgan was downgraded after these Q3 earnings to a hold. And I think when you look at the stock chart, it is going sideways, and it had a monster run year to date and over the last year. I think that's pretty accurate in my opinion. Now, Jamie Dimon, who is the CEO and chief over at JP Morgan, says he still thinks Bitcoin is worthless, which I think is a rich take considering he deals in almost exclusively fiat currency. So somebody that deals almost exclusively in United States dollars and obviously around the world, with JP Morgan being a global bank, it's a little rich to say that Bitcoin is worthless, but he changed his stance on it. I think a couple years ago, he was quoted as saying he was going to fire any of his junior bankers who was dealing with Bitcoin. Well, now they're going to deal with it, but he doesn't like it. So it's kind of one of those things. It's almost like a parent and child relationship. Your child is doing something you don't like, but you let him get away with it. JP Morgan hires two. This is actually interesting. This probably slipped under most people's radar. JP Morgan's hired two executives to rebuild online investing products. So when they're talking about online investing, they're talking about maybe similar to Robinhood, but probably more in line with what Schwab offers and maybe like an E-Trade. I thought what was interesting here is they're looking to launch a product early next year that includes margin and securities-based lending, both of which have become popular with investors over the last year or two, is particularly margin. But I think what's going to get even more popular is security-based lending, which is basically you'll be able to borrow against your portfolio. So let's say you have $1 million in your portfolio. This is what mega rich people do to avoid taxes. Well, instead of selling those securities and those stocks and creating capital gains and income tax, state tax, federal tax, which looks like they're going to start enforcing, and maybe those taxes eventually start going up. Well, now you're going to just be able to borrow against them. And guess what? A loan is tax-free, a tax-free loan on your stocks. That's a popular thing. And if they can open that up to masses, I think that would be a very interesting product Indeed. Now, JP Morgan announced previously hiked dividends. So they hiked this dividend. It was at 90 cents. They increased it by over 11%. Now you're getting $1 per share per quarter. So you're getting $4 a year as you hold JP Morgan. So as this stock starts to pull back, should get exciting from a yield perspective. Now, let's jump into the Q3 numbers. I want to just show you, every time I bring up JP Morgan, they have the same like PDF, and they have Jamie Dimon's statement on the right. You can certainly read that if you want. But what I look for first is firm-wide metrics. This is the entire firm, consumer, business, all the banking loans, all wrapped into one. Average loans were up 5%. That's good, okay? Because how does JP Morgan make money? They make money by lending money out. Average deposits up 19%. So that's a little bit of a dichotomy. You'd actually like to see loans up a little bit more if average deposits are up 19%. On the credit card side, average loans are down 2%. Net charge-off rate is still really low, though. So it's showing me that they probably are willing to lend more money out on the credit card side because these default rates are historically low. But people aren't necessarily going for that. And then you've got down here, average loans are down 7% year over year, and deposits are up 21%. So people are continuing to put money in the bank and not take out more loans. And before we get into the numbers, I'll remind you, there's this whole argument on Wall Street right now, and really across the entire economy, that inflation is coming. Inflation is here. Inflation's going to get worse and worse and worse. Well, what would you do in an inflationary environment? The smart person would get rid of every single dollar that they had and go borrow more money, okay? And then spend that money on assets, have those assets inflate, and then they would sell them. We're not seeing evidence of that. So either people are really stupid with their money, or they're not convinced inflation is here. Maybe it's somewhere in between. We'll talk about that. Now, consumer and community banking. This is the largest, or basically one of the largest, especially from a profit perspective as well with JPM. So we've got our net revenue here, came in at $12.5 billion. We notice that is down year over year and quarter over quarter, okay? Down by about 2 to 3% on both of those sides. Consumer business banking also up slightly, so that we're seeing a little bit of an improvement there. But here's where we're not seeing a great improvement is home lending. Now that is up just fractionally quarter over quarter, but that is down about 18% year over year. So that could be a sign that consumers are starting to reject the high prices. I don't have to tell anybody here on the channel that home prices have absolutely skyrocketed, in my opinion, probably gotten way out ahead of themselves. So at some point, we have to see evidence that consumers are rejecting those prices, okay? Inflation stays intact until it's rejected by consumers, rejected by the spend of consumers. And while we're seeing still healthy home lending, it is down. And if that continues on a year, not necessarily from a quarter over quarter, you can't really tell much, but year over year, if you see home lending drop another 18% year over year this time next year, well, yeah, that's a sign that consumers are starting to reject those high prices. Now, the other area where we're seeing high prices, I get an offer on my Mercedes every day. Come trade it in. We'll buy it off of you for basically what I owe on it. And I think even a little bit more. We're seeing autos, used autos, new automobiles, all very, very much going up in price. And so you would expect the consumer to eventually reject those prices. And here we are seeing a little bit of evidence of that. Last year, you were at 5.4 on card and auto. I know this is a mix of card and auto, and we just specifically talked about auto, but we are seeing that down 9% and even 8% quarter over quarter. Take a look, just quarter over quarter, that segment of the business is actually down 8%. So that's interesting as well. Now we've got our net income here that came in at $4.3 billion. We're seeing that is up year over year, but is down a little bit quarter over quarter. But some of that had to do with these provision for credit losses. Now, hang with me here. Banks like JP Morgan set aside money, especially at the beginning of the health situation. Q2, Q3 of last year. Take a look. Last year at this time, they set aside $795 million just in case consumers started defaulting on their cards, their home loans, and their autos. So as JP Morgan lends money out, they set aside a certain portion to cover credit defaults, people just not paying their bills, okay? Well, they overestimated. They thought the pandemic would have a much bigger impact on that. And what they saw was they were able to release $1.86 billion last quarter. That led to just gigantic net income. This quarter, not as much, at least in this division, $459 million, but that did help bolster this net income. Now, the other big business for JP Morgan is this corporate and investment bank. So we see net revenues coming in at $12.4 billion. That is down quarter over quarter, but it is back up year over year. That is kind of a bullish sign for the economy, okay? Because if corporates were pulling back like they were in Q3, think about Q3 of last year, okay? We have no vaccines. We have no viable treatments. There's a lot of panic. There's a lot of uncertainty. There's a lot of worry among corporate boards, businesses. And so they were pulling back their spend. They weren't hiring necessarily. Maybe they were even shedding workers. They were contracting a little bit, and you could see that in that net revenue. But that kind of went away in Q2, and we're seeing Q3. So that is somewhat bullish. Okay, it is down quarter over quarter, but we are up quite a bit year over year on that. On the banking side, steady quarter over quarter, relatively steady, and like big, gigantic 30% growth year over year on that one. On market and securities, again, relatively steady business. And non-interest expense, they're keeping their expenses relatively in line over at JP Morgan. That has helped bolster this net income, because here's what I want to take a look at, is our net income is down quarter over quarter, but we earned way more money. Okay, well, not way more, maybe like $600 million, which is a lot of money, but $5.56 billion worth of profits off of these $12.4 billion worth of revenue. A lot of that, as you can see here, provisions for credit losses. Okay, last year we released $81 million. In the last quarter, we released about $80 million. And in the most recent quarter, they're saying, hey, our corporate clients are doing good. We don't have to set aside money for credit losses. They released another $638 million. That helped to bolster this net income on those revenues, which are relatively flat, if not down, on a quarter over quarter basis. Now, from a technical perspective over at JP Morgan, things are looking pretty good to me. Okay, yes, I know we flattened out here, but here's what you got to realize. This stock was at $92 in October of last year, and it peaked out just recently at $170. Okay, a big, gigantic consumer and business bank just doesn't do that. Okay, so it's actually nice that this thing's starting to flatten out. We're seeing sideways consolidation between 150 and up to 165. If this thing pulls back to 150, that is a buying opportunity, in my opinion. And then if for some reason things get really, really bad, the thing is JP Morgan has a little bit of buffer, okay? If the economy starts getting bad, well, the government will just start handing out stimulus, and we've seen how well that has worked for JP Morgan. Let's say the economy roars back and inflation kind of, starts to really look permanent. Well, what's the Federal Reserve going to have to do? Raise interest rates. You start raising interest rates, that helps a bank like JP Morgan as well. So I like this one on pullbacks. What I would do personally, okay, if you have exposure to mega cap tech, you have exposure to speculative EV stocks or speculative energy stocks, you have no exposure to banks, I think you start right here at JP Morgan, especially as we pull down to the bottom of these ranges. 155 to 150 looks really good. You break 150, I'd throw a party, because it probably means you have some odds of coming all the way down here to 140, 145. That would be absolutely spectacular, I think. You'd be getting it underneath our consolidating range. I'd love it there. I'd probably add a few more shares. I'd be a little more aggressive down south of 150, but I'd also love to pick this one up from 150 to 155. Your yield will be very close to 3. You're getting $4 per share on a dividend on this one. This is a buy and hold investment. This is a view into the economy, and I think every single portfolio needs some exposure to banks, especially if you believe inflation is here. The Fed will eventually have their hands tied and have to start raising interest rates at some point. And that will be very bullish for JP Morgan. Hopefully you guys enjoyed this video. Follow me on Instagram and Twitter below. I have some links in the description. I'd love to see you over there. We'll see you again soon with more videos. Good luck with your investments.